Here's the key things you're going to get away from this. Where are we going with inflation? What, are we going to get hyperinflation this year? What is hyperinflation? And how do we make money in an inflationary world? What should we be investing in an inflationary world? And hey everyone, welcome back to the Mark Loeffler Experience. We got another great show here for you today. We're going to be talking inflation, all the time. And we're going to have a little bit look back on the market today. We're recording this on Friday. This is going to come out on Monday. And just a little bit of my prediction, what's going to happen in the next week, just from everything everyone's saying and what my general opinion is as well. And let me know down below, should I start posting my one of my stock accounts on my Instagram every day, and you guys can have a look and see what I'm doing? Comment down below. Definitely smash that like button for the YouTube algorithm, and let's go. If you guys don't know, if you've been living under a rock or you don't follow the news or just for whatever reason, the PPI, which is the producer price index, so that is basically from the manufacturer or the wholesaler. It basically, the estimate was 0.5 and it came out as 1%. And why is that a big deal? Well, that means the cost of goods going up. If you've been, again, living under a rock, you will have noticed this. I don't know how many people I've seen on Facebook post the price of plywood now. Obviously, it's like $15, $16 a sheet. 2x4s are coming in at $9. This is all Canadian. Price of gas is going up. Groceries, if you guys eat, you'll know that groceries prices are going up. So all these things are going up, and yet when inflation numbers come out, they've been super low. We're going to talk a little bit coming up. We're going to talk about why some of this is happening, and my prediction where we're going with this, and what this is going to do for the markets, for the stock market, for the real estate market, and what that's going to look like. So as you can see on the screen, so the PPI is right here. It's at 1%. The forecast was 0.5. You can see that in the previous months, February, March, and April, we are over estimates. So the estimate in February was 0.4, and it was 1.3. So this, we're getting inflation. Anybody who didn't think we were getting inflation, I don't know. I think you've been living under a rock. You haven't purchased anything. There is no way that you can pump as much money in to the economy as everyone is doing, and we're not going to get inflation. Plus, you go on to the other side, and we have supply constraints. We are just not getting deliveries of some items, right? So I don't know if you've noticed, but GM has shut down their truck plant because they're not getting computer chips. Ford is talking about laying off workers because, again, we're not getting chips. And they just don't have enough chips to be able to manufacture the cars. I don't know. I ordered a Tesla today and they say it's September delivery. So we'll see if that goes. Let me know if you guys comment down below if you want me to make a video on why I bought a Tesla and what it's going to do for my taxes, because that was one of the main reasons I bought it, just for that. All right. Core PPI, which is consumer. This excludes food and energy. And again, it's coming in 3 times higher than expectations. So the government actually inflates the money 2 to 3% a year. Their target is like 2.5%. What most people don't realize is this just another tax on everybody, right? Inflation is a tax because the dollar you spend today is going to be worth 5% less tomorrow. And obviously they do this to grow GDP, which I think the most modern, like the US, Canada, I think we're going to see GDP rise this year a good 8 to 10%, at least in Canada, if we can get out of all these stupid lockdowns. But don't get me started on that. Yeah, it won't be good. It won't be good. But you can see that the employment change was actually really good in Canada today. We had 300,000, but that went through the tank because we're all back in lockdown. We're all at stay-at-home orders. So I think everyone's going to get the jab. I know I called this early. I said June. I don't know if I'm going to be right, but I damn hope I am, because June would be great. We just get out, live our lives, and get out from under the rocks we're living in. Okay, so that's core PPI. That's PPI. Obviously, if you guys are investors, you should be watching this type of stuff, right? You need to be learning this stuff because this has this should have an effect on how you invest. So, I mean, you can go to Investopedia. Obviously, they're going to tell you you can buy, what CPI is and what and PPI and commodities and that type of stuff. Couple ways to invest. There's a treasury bond in the United States that basically you buy it and it's inflation protected. So it will go up with inflation. So if we have 5% inflation, you will be protected against that. So a lot of big companies will do that, or countries, wealthier investors who are just looking to not lose money. Because again, if you sit with money in the bank, you're losing money every day because your purchasing power is going down every day. This is just a chart of the commodity price index, which basically tracks oil, coal, pulp, lumber, newsprint, natural gas, all these agricultural metals, minerals, everything. So we're at about 521, and you can see what we were at before. This is back in 2014. We've been super low. So it is obviously getting higher and higher. Back in May of 2018, we're 495. But this is going up, right? I mean, if you've noticed, the price of lumber, obviously oil is going back up. So it's getting more costly to do business out there. And some of this is supply chain driven. We're not getting some of the stuff that we were, that's produced in China. We're not getting it as quickly. So for plywood, as instance, I've heard from some plywood manufacturers that what we're not getting is the glue to be able to make the plywood. We are just not getting the raw material to be able to make the goods. What my belief is, and this is my opinion and nobody else's, maybe other people share this belief, we're going to see this come down. So the price of lumber, I don't think it's going to be like we're at a 200-300% increase right now. I think that's going to come off a little bit as that supply chain starts to come back into effect and we're able to move goods around the world and everything isn't just stagnated. What does this have to do with us? Well, other than it costs us more money to go fuel up or to buy groceries or to buy lumber, well, if there's inflation, the interest rates go up. So if there's inflation, the interest rates go up. As you can see, U.S. Treasury is at 1.658. It's off its highs. So that's a 1 day. And to be honest with you, I think we're going to be over 2%. I think that's probably coming in May. And again, before all this, we were in the 3% range. I think we get back to the 3% range. And what everybody has been talking about and why this isn't as much a concern, I think, for me at least, is that usually when inflation goes up, the Fed or the Canadian government, whoever, will raise interest rates. And they've all publicly stated, the Fed, they're basically saying we're not going to do anything until the economy is full on and going again. So they're going to keep inflating this economy until we are full on and going again. What does that mean to me? Well, if they're going to keep pumping the economy, then asset prices are going to continue to go up. So interest rates are going to stay low. Now, obviously, fixed rate products have gone up, yet I just bought an apartment building and I used a variable rate product on that. Obviously, in Canada, easier to do than the US. Yet in the US, I mean, you're still getting 30-year rates at stupid low numbers. Obviously, they've gone up in the last month, but it's still like if you can lock in a 30-year rate at like 3%, I mean, that is free money in my opinion. So, we're still looking at pretty historically low treasury yields. And in my opinion, I think we're going to see over 2%. I don't think it's going to have a huge effect on the market. Obviously, we've been watching, if you've been watching the channel, we've been watching this bull trend, right? And so we've kind of peaked above this bull trend. And there's a lot of economists out there, a lot of people, talking heads on CNBC and all these types of places that are saying that we're going to see the market rip. Which basically means, if you guys watched the stock market video last Thursday, because there's so much money floating out there and with money being devalued, people getting into assets. Obviously, we've seen that in real estate in the last year. So we think, most people think this is going to rip, at least for the short term. And and then they say a 10% pullback. Well, you know what? Like, we're at 41.28. We closed on Friday. Obviously, it's coming out Monday. We could see easily 4,200, 4,250. And, then they say a 10% pullback. Well, okay. A 10% pullback at 4,250 or 4,300 would be 3,850 to 3,900. So basically, all we're doing is widening our bull gap. I haven't heard one person other than like the doomsayers out there say that we're going to come into a bear trend and that the S&P is not going to be higher at the end of the year than it is today. What does that mean? What should we be investing in for an inflationary environment? So stocks that do well in an inflationary environment are things like companies that have products that they can sell that there is no extra cost to them. For instance, like a Microsoft. For them to sell one more package, there's no big, they don't have a big cost. And again, companies that don't have a lot of debt, because a lot of people are taking on big debts. Well, in an inflationary environment, interest rates go up, their debt costs more. So therefore, they're not gonna be as profitable, right? Or companies that are sitting on a lot of cash, even though it's gonna get deflated. Something say like, Apple, which they're sitting on a lot of cash, so that's going to get deflated, yet they're not price sensitive, right? So if their costs go up, they charge $1,500 for a phone already. You can already go out and get a cheaper phone. I mean, I bought this nice MacBook and I could have bought a cheaper computer, right? So their customers aren't as price sensitive. If prices go up, they're just going to charge more money. Something like a Facebook advertise, they'll just charge advertisers more. So, and it doesn't cost them anything more for one more advertiser or people coming on. Google, same thing. So if you're looking in the tech space, then you're going to go to these big safe names rather than the ones that have no revenue, that are borrowing money to be able to grow and grow and grow. So good names with good income, good balance sheets. I mean, I know it sounds old fashioned, but there we are. Does real estate do well in an inflationary environment? Yes and no. And why? Well, I mean, if you're buying apartment buildings in, say Ontario or anywhere that has a low cap rate environment or a upper ceiling on how much you can raise rents, then if inflation goes and you can't beat your inflation with getting your rents up, then you're going to lose money over time because your expenses are going to go up. And we know this, like commercial real estate is cap rate driven, right? So if you can't raise your income and your interest expenses go up, well, it's the gap between your interest and what your cap rate is. That's your profit. So most people don't want to see that profit diminish. So therefore, some of those assets will come down in price. And I actually hope so, because obviously I've sold 7 of my buildings and I'd like to get back into the market. And will the market crash? Time will tell. All right, guys, that's it for today. We'll catch you in the next one. Have a great one. Talk to you soon.